Hey Cheryl, we're live.
We're live. Does it say you were live on your side? It doesn't
Is
say.
it on my side? We must be
Hello,
live.
everybody. Hi, Rob. Hi, Nigel. And welcome to the Business of Property. Hello, Property Development Australia. We have Rob Flux with a special guest. We've had a few times now. Rob Flux, if those of you who don't know and can't read the banners behind him, Rob runs the Property Developer Network, which is one of the biggest property development network groups in Australia, probably the biggest. Rob also runs a property education course, which he can tell you a little bit more about a little bit later. And we have Nigel, who is from My Loan Pays Me. Nigel is a mortgage broker, finance broker who deals with residential and commercial loans. So thank you both very much for being here. We've got some wild times that we're experiencing at the moment. I'm sure we've got a lot of interest in what we're going to be talking about because we're talking about Corona. No one knows what's been happening, has been hiding in their hole, probably a good thing. I think everyone's going to be hiding in a hole starting very, very soon if they aren't already. But the big question is, and there's a lot of uncertainty in the market, and I really want to reach out, one, to obviously an experienced property developer. Rob, you know the market pretty well, and also Nigel in terms of what's happening in the finance and funding space, because we have a lot of developers here that are either looking or were looking to buy and enter into projects, or are in the middle of projects. I guess if you're in the middle of projects, it's not too bad because you've got your funding already. But what if you're looking, or you're about to enter into that? So hi everyone that's come on board. Please feel free to add any comments here and I can read them out to the gentlemen. The format of this is really going to be sort of quite similar to our other interviews. It's a real question and answer session. So, the more that you ask questions, the more that you'll get out of this. Ray says, to start, hello everyone.
Hey Ray, how are you, mate?
How's it going, Ray?
US is planning to introduce new digital dollar. Is it a system change? Oh, straight in.
I'm not going to talk about digital currencies. It's too early for that sort of thing to tell. The world is based on the US dollar at the moment. How long it stays based on the US dollar, I guess, is to be seen, but it's been the US dollar for a good couple of 100 years. I don't think that's going to change in the next week.
Yeah. I think it's that's another sort of thing to throw into the whole mix. But so, I mean, we can talk about in terms of money being pumped in, what the government's doing to provide sort of relief to those that have lost jobs and what sort of impact that's going to have. But let's start with you, Rob, because I can feel it in the energy going, just let me speak, stop talking, Cheryl. I can see it. Tell us, Rob, there's a whole lot of doom and gloom at the moment, and obviously there's talks of up to 20% drops in property prices. Job losses up to 300,000 or more across Australia. What is this doing or going to do to the property market, and should we basically all pack up and hide in our little holes?
So the answer is absolutely. There's going to be an impact to the property market. It's inevitable. It's just a matter of time before we functionally fall into a recession. But the biggest point of it is that we've had a lot of market crashes over a lot of years, and the patterns always repeat themselves. I've been through 3 market crashes myself. We had the recession that we had to have. We had the Y2K bug. And we've had the GFC, and I've been in property for all of those and seen the cycles right up and down. And there will absolutely be a drop, but after the drop, then there's opportunities for it to rebound, and it will rebound. So it's really just getting yourself market ready for the inevitable. So if you are in deals right now or in properties right now, it's taking an assessment of your current situation and say, well, if I can afford to hold it, then I should, because it'll ride out in the long term. If you can't afford to hold it, then you've got to make some informed decisions as to whether or not you want to realize any particular loss, or if there are other ways that you can trade out of it.
So, but like, how different or how similar is this to the other three? Because we're chucking in a whole new, we're talking about a viral, a virus that's affecting it globally, plus on top of the economic side of things.
Yeah, so the nearest equivalent would have to be the GFC, being a global impact, and this is equally a global impact. So it's going to be severe. How severe, we don't really know, because we don't know how quickly people are going to go into recovery phase from, I guess, the virus. But the reality is that it's going to happen. So all we can really do is slow down the spread of it. We can't really stop it. And by slowing down the spread, we are able to bring it in control so that our health systems can actually deal with it. And that's really what our government is trying to do, is just slow it down, what they're calling flatten the curve, which means that it's going to be a long, protracted process, rather than everyone get infected in one hit and have it over and done with. That way we can save lives, and lives are way more important than the economy.
Yeah, absolutely. So we've got a few, I guess, in terms of the community, we've had a few questions around, and if we can talk about this, I've been looking for a site, been looking to get into development. Is this the right time to do it, or should I hold on?
I think the answer is you should absolutely be educating yourself right now. I don't think you should be getting into a deal right now, but you want to be educating yourself and using this time. A lot of us are being sent home, so we're cooped up, we've got nothing to do, and this is the time to educate yourself, ready for the inevitable.
I totally agree. I totally agree with Rob. From a finance point of view as well, what we have noticed is, yes, due to the COVID-19 outbreak, there are lots of relief packages that banks have started. Not everyone has passed on the new RBA rate cut, just for a few like CBA and some of the tier 1 banks, but they have all come up with relief packages right up to 6 months of repayment holiday. They have reduced your rates. The fixed rates have reduced. Some lenders have passed on the cut onto the fixed rates. So term deposit rates also have increased. Someone that's moving into development in the next 3 to 6 months, you will see a lot of tightening happening with the majors. So there's always the yin and the yang. So if the banks have to drop something, they have to tighten something. Otherwise, it's going to lead up to another GFC with inflated property prices. So those who have approvals right now, or are in the process of getting approvals, I would say just get them right now. Get them, because now it's not changed. Lending scenarios, lending indexes have not moved. You want to get that till it's when you have a good borrowing capacity. But another thing to note is those borrowing capacities, the pre-approvals, the conditional approvals are valid maximum for 180 days. Then again, if you're a developer, a lot of private lenders have totally tightened. So if you had an approval last week and you went to a private lender this week, if you are a developer and looking for private lenders, for private funding, the market has changed for private funding. So if you are into the development game, or you want to get in, definitely agree with what Rob's saying, is you need to educate yourself. You need to find out what are the rules, what are the regulations, what are your borrowing capacities, and depending on the loan type, whether it's going to be a full doc loan or it's going to be a low doc. So there are different scenarios. So education is the key, because last thing you want is when you jump in, and then you're halfway down the project and you need any more funding and everything is tightened, and then it's going to put you and your development and your project in strife.
Yeah.
So yeah.
So I'd probably be I'd probably flesh that out a little bit more and say you want to be deal ready now. So you've got all your finances in place, you've got your pre-approvals ready to go, you've cashed in anything that I guess is surplus assets that you don't actually need. So you're ready to grab a deal. You also want to be educated to make sure that you're grabbing the right deal, but I wouldn't be jumping into a deal today. I would be very cautious about jumping into a deal today. The market is going to drop. It's just a matter, they're talking upwards of 20% drop. Whether it's 5, 10, 20, it's really hard to determine, but let's just say that it is going to drop. But after it drops, what is most important is to understand that our market fundamentals are still strong. We still have huge population growths. We still have an undersupply of property in most of the capital cities, and interest rates are at the lowest that they're actually going to be. We've pretty much got all of the right market drivers pointing in the right direction. The only thing that we don't have is, I guess, market sentiment. And market sentiment is clearly very low at the moment because of what's going on.
And is that, we talk about market sentiment, and it is, you know, a lot of that is the emotional side of things. Obviously, we've got a whole lot of job losses, and that's going to, you know, take a few weeks to really kick into places to the real impact of that. But, you know, banks and the federal government's really pumping it up to try to still stimulate, but I think it's more to keep things afloat. First, I mean, if you aren't already aware, if you're in business or in employment, and if you haven't already looked into the packages that are available to you, definitely do. But are either of you aware of any of these that, say, developers might have access to?
I'm not aware of any that developers have access to. I guess there's funding as a small business if you employ people. So if you're a developer that happens to employ people, and I'm fortunate to be one of those, then there's small compensations you can get, but it's not really going to help you to acquire your property. It's intended to try and keep you employing your staff. If you can keep employing your staff, they're going to keep spending money in the economy. If they keep spending money in the economy keeps ticking over. So that's what the incentives are there for. It's not to incentivize us to go out and profiteer from the process. And I'm very much not wanting to be an ambulance chaser in this scenario either. But you know, there's inevitably going to be people that are fire selling properties, and so it's really trying to be ready to take on those opportunities should they be there. But make sure you do that in a way where you're actually helping that person out and not just taking advantage of them.
Yes, absolutely. And we're finding, you know, there's talks in the community and the groups about, you know, the few people who have rental properties and their tenants basically advising that they've lost their jobs. We've seen a few people sort of reach out and say, well, we can sort of carry a little bit of the weight at the moment and offer, you know, whether there was no rent or reduced rent. So definitely, you know, we talk very much about how we're able to help each other in the community and not necessarily take advantage of the situation here. Before we continue, I've got a few sort of comments here. Ray's referring to the stimulus bill again from the US, but fixed rates, he mentions fixed rates have been reduced. And that's interesting, Nigel. Fixed rates reduced, but variable rates haven't. And why is that?
So I guess at the end of the day, banks, they're a business, right? So at the end, they have to look after their shareholders as well. So by passing on the rate cut to the fixed rates, they are still giving clients the benefit of reduced rates, but at the same time, they want to make sure they retain these clients for a long term as well. And they're not just going to have clients jumping from bank to bank, and then it loses its purpose. So
Yeah.
I guess it started with CBA, and that's a very smart move that CBA has started, and that has changed the game for all the other lenders to now sit up and think about their strategy as well. And Westpac has done the same. So yeah, it's just about customer retention now
Sure.
for all these lenders.
Are you finding that which part of your business at the moment, obviously you're doing finance, is the busiest? Like it's keeping you on your toes? Is that the whole refinance space?
Definitely, as at this stage of at this point of time, refinancing is the biggest chunk of my business because. And that's what I always tell all my clients, that you need to have a look at your existing rates, because this is the golden opportunity to actually now save, and that could boost helping you guys pay your mortgage a little bit much faster, because we have clients that we have saved for their rates are almost about 90 basis points higher. So because they have been on old rates, not reviewed, didn't know what was happening. And yeah, this is a time for everyone to go back and check, because a lot of customers don't know what they are on.
Yeah.
And if you don't ask, you'll not get. So the first thing I tell all my clients is go back to your banks and start negotiating. Start negotiating hard. And at the end of the day, the bank is not paying your mortgage, you are. So you're entitled to ask. So yeah, that's the first step you need to do. Go and look, negotiate, haggle them. If you're still not happy, then look around.
And my guidance there would be, and understanding what's happening in our market, that a lot of people are actually losing their jobs. And the flow-on effect will be, well, if there's less people with jobs, there's less people spending money, which means that other businesses downstream are going to get impacted sooner or later, inevitably. So whilst you have an income, now is the time to get that refinance. We don't know what's going to happen in a week, in 2 weeks, in a month. But if you've got an income right now and you've got an opportunity to reduce your rates, if you've got an opportunity to get yourself in a position where you can get yourself deal ready for an opportunity that might be around the corner, now's the time to do that. Be ready, be alert but not alarmed is what I would say.
Sure.
Exactly, because you never know when your situation can change, and then you have no choice. And then when the bank knows you have no choice, that's it. They're not there's no room for negotiation, because in terms, and why, Cheryl, why customers are refinancing like crazy is because there are banks that are offering a refinance cashback as high as 4,500 per refinance. And if you have multiple properties, they are offering 3,500 per property. So if a customer has 3 securities that they're refinancing, that's 10,500. That's crazy. Never seen something like this. It's absolutely nuts. And on top of that, you get the golden rate, which we have never seen in Australia for all these years. So yeah, definitely be finance ready. Go and just look and review your rates and see what you're on right now, because that's going to save you thousands of dollars.
Okay.
Yeah. Probably the biggest advice I'd say, Cheryl, is to not panic, right? To use the time that you've got right now to prepare, but not panic. I would not be selling property right this very moment unless I had no choice. If I can afford to hold property, I would absolutely hold the property. The market drop will come back. It's really just a matter of whether or not you, in that short term, whether or not you can actually take the negative cash flow that may impact on you in the short term. But from a capital perspective, it'll come back inevitably. If you are forced to sell, then I would be taking whatever money is on the table right now. Don't be haggling for the last dollar. Be grateful for the fact that there is somebody wanting to buy your property right now, because the number of people going through home opens and the like right now has dropped massively, and it will continue to drop as people are afraid to actually interact with other people in case of spreading it, and 2, there's less people with money at the moment because people are losing their jobs. So if you've got a willing buyer that's paying a fair and reasonable price, take the money that's on the table.
Yeah,
absolutely. Because if the numbers stack up, if what government says comes through, that in the next 6 to 12 months we're gonna have job losses as high as 300,000, there's going to be a lot of supply as compared to demand. And due to that curve, you can see property prices drop by even 20%.
And that's the time to be buying.
And that's
So
the
if
time.
you get yourself deal ready now, and when that happens, whether it's a 10% drop, whether it's a 20% drop, the time to buy is, I guess, at the bottom of that cycle. And especially if you're doing it from a development sense, because you know that by the time you do your development process, get all your approvals in place, get all of your construction completed, we're actually full into the recovery mode at that point, because I think it's going to take about 2 years for us to get back to where we are right now. And if you're doing something that involves construction, that's really about when that's going to occur. And our market fundamentals still have population growing, so we still need the housing, we still need the stock.
And my question around also that construction itself, like how is the construction industry going to be impacted by this? And you know, does that mean construction timeframes are going to be pulled out as well, because you're not getting as many trades on site? But in any case, it's not like everyone's hugging and kissing. We hope not. But you know, or are they considered an essential service?
I don't think they're deemed to be an essential service, but so is there likely to be a time where all of Australia shut down is probably the better question, in which case that will then take out the building industry and others. But I guess until then, they're going to keep working as much as they can, because they need work to pay the bills. So people are going to continue to work as within the best of their capability in the short term. I think there is absolutely going to be a period where there is no work, whilst the actual virus is, I guess, at its peak, and then the government will release the foot off the gas, and hopefully we can then come back. And it's really just how quickly we can come back is really the question.
Yeah, I'm going to sort of shoot you a few questions and comments now. Rahula has asked, if I am ready to sell a few townhouses, should I sell now or hold? I think you might have touched on that point before, Rob.
Well, I have, but I'll be a little bit more specific. It's not about whether you're ready, it's whether you have to. I would not be selling unless I really had to. I would be trying to hold on at this moment in time. If you have no choice, then sure, sell them, but sell them at a fair and reasonable market price, and don't be greedy. If you don't have to sell them, hold on.
Tom says, honest advice, guys. Some are still spooking the market.
You'll probably find that there's a whole bunch of Facebook ads that were loaded up 2 or 3 months ago that is still in the cycle, where people have just kind of forgotten. They've kind of gone home and forgot to tell their marketing guy to turn it off. Yeah, the fundamentals are strong, absolutely. But I guess today is not the day to be buying a new property.
Yeah. Well, you've got a very keen person here, Vinod, who says, Hi guys, I come from Myanmar to attend master's degree in property development in New South Wales. Probably not the best time. He wants to get an internship in property development, and willing to work for free. So any case, very, very keen. If you want to talk about mentoring, Rob's probably the best person to speak to in this forum here.
I would say tongue in cheek that if you're wanting to work for free, probably now's the best time to do that, because there's not going to be many people employing.
That's right. Exactly. But it's a great time to be learning.
It's a fantastic time to be learning.
Absolutely. Absolutely. So what is sort of, let's talk about a bit about this being prepared, and how, particularly those who are listening who are in a situation where they've either lost jobs or have had hours reduced. What might be some sort of tips and advice from either of you as to how to get through this at the moment? Not that it's sort of, it's, you know, not talking.
Well, I guess it's always difficult when there's, sorry, Nigel, it's always difficult when there's job losses involved. It's a very difficult situation for everyone. And I empathise with everyone concerned. We've got challenges in my wife's business where that's potentially have to close down, and we're seeing all the people impacted in that. So I empathise with everyone there firstly. But what I would be saying is have a look at your current budgets, your income and your expenditure, and have a look at what have you got right now that is a sacrificial expense that you don't need. What is the massive internet bill that you're paying that you don't need that larger plan? What is the massive phone bill that you don't need that larger plan? What is the lease that you're paying on your car that you don't need that lease because in the next 6 months, you're probably not going to be leaving your home for a little while. You know, have a look at opportunities like that to say, where can I reduce my expenses as much as possible to make sure that whatever I've got can eke me by? That's probably the first element to it. Then have a look at your assets and liabilities, I guess the properties that you've got in your portfolio. Start to have a look at them in a great level of detail and go, if I've got tenants in them right now, when is the lease actually due? And what can I do right now to make sure that that lease stays in place for as long as possible if it's becoming due? Maybe you need to renegotiate a slightly lower rate in the short term to let them through. Understand where your break-even point is so that, you know, if something occurs, if your tenant can't pay the rent, what's going to happen to you? And try to do that right now while you're not emotional, while you can actually do that with a clear head and look at things, I guess, more on a dollars and cents perspective rather than emotional. And look at the assets that you must sell. And what are the assets that you can afford to hold on to, even if it's going to take a short-term hit. They're probably the things that I do to prepare myself, and apply for any finance that you can, because there's deals coming.
So Nigel, what are some steps that people can take now in terms of their finance if they've lost jobs, or if, you know, jobs have been scaled back?
So firstly, if I know that I'm going to be in trouble in the next month, there are a lot of instances where you could be sitting on some equity in your property, where you can do an equity cash out and have that as a rainy day. I've just done one 2 days back for one of my clients. He had about 52,000 sitting. His valuation came decent. We had that equity. We did an equity cash out with the intention of, in future, if he's looking for an investment property, he can use that. However, this equity cash out can be used for a rainy day as well. So in the instance, if you're going to be in trouble, you're going to be losing that job, this can come really in handy, because right now you have the income to service it. That's one thing. If you have already been notified that your hours are going to be reduced, definitely what Rob mentioned about having a budget in place, paramount important. Like someone like me who does all these takeaways, I would have to stop that or reduce that considerably by looking at my budget, looking at my expenditure. So that's the second. That's the first thing. The second thing I would do is work out my repayments now. So there are instances where you have the option that if you can't make the repayments, rather than directly going into hardship and applying for hardship with the bank, there are options where you can convert your principal and interest repayments into interest-only repayments. So obviously your loan is you're not paying off your loan, but it's your repayments get reduced. So that is the next step I would take to work out and see if I go interest only, how would that impact my lifestyle, and without causing any financial distress on yourself or your family. If if you cannot make the repayments, then the next thing you would have to do is approach the bank, and then work out, the bank would work out what options you would have. With the current scenario, you have a 3-month repayment holiday, and even after 3 months your situation does not change, for the first time they will increase that 3 months to another 3 months, so you'll have 6 months. But bear in mind, even though you're not making this repayments, when you say a repayment holiday, that means you're not making any repayments for 3 months. It comes with a cost. Your interest is compounded daily, and it's going to be added on top of at the end of the month. So it's going to be over 3 months, and that will push you couple of years backwards, with all the interest accumulated and compounded. But at the end of the day, if there is no choice and this becomes the last option, yes, this is what I would do. But firstly, look at interest-only options to push it.
Sorry to interrupt, Nigel. How quickly are the banks implementing these loan holidays?
They have just passed the directive, so definitely everyone, all the lenders and all the credit team is aware of what's going to happen. It wouldn't happen immediately. They would try to work out options, because that's the last thing even the bank wants to do, because they know for a fact that even a 1 month repayment holiday can push the client 5 years backwards. So they will work out different options with the client. And then if there's no other choice, and there's just, like, for example, just the wife or the husband is working, and that income is not enough to make any loan repayments, they would probably implement this sooner than later, rather than later.
Sure. Thanks, Nigel. I've got a few more questions that have popped up, so I'll address those. James asked, Rob, you say it's not the time to buy, but in your opinion, how long would it be till you think the opportunity will be to buy?
That really depends on how hard the government puts the brakes on, I guess, people's movements. So the more they put the brakes on, the more people physically can't go to work, which means the more people are going to lose their jobs. So the quicker that economic impact's going to occur. If I owned a crystal ball, I'd probably say 3 to 6 months is probably where I think that the market's going to feel the impact quite hard. Right now, they're seeing the knee-jerk reaction, but I guess there's the flow-on effect that's going to come from that. And I think 3 to 6 months is where we're going to see the market start to feel it, because property is going to come on the market, then they're going to sit there, then people are going to get desperate, and then it's going to cycle from there. That's kind of how I see that would occur. So if you have to sell, then this very second putting it on the market right now means you're going to beat that curve. You're going to beat the people that are panicking. But if you don't have to sell, I'd be looking for opportunities in 3 to 6 months, which means if you haven't yet learnt property development, or you're wanting to, and it's been one of the things, this is a once in a lifetime cycle, guys, where the whole world is being impacted. You got 6 months to prepare for, I guess, finding that deal. So go and learn whatever strategy you think you want to implement. Now's the time to go out and execute that and actually learn the strategy. Don't just guess and think that you're going to pick a winner. Learn how to do it first and cherry pick the right deal.
Yeah, thanks, Rob. So, and Corey's asking, if I have a DA approved block ready to go, do you think building for roomy accommodation in the next year is a good move? 10 kilometers from Brisbane CBD.
Again, crystal ball. I would be more concerned that you're going to start the process and the builder will either have to down tools and stop, or alternatively, the builder's going to go broke. I'd be more concerned at this moment in time. So I'd be very hesitant in starting a construction right this very second. If you're already mid-construction, then I'd be doing everything humanly possible to keep that builder ticking along and make sure that your bills are paid and that you're checking in with him every single day as to how he's tracking cash flow wise. But yeah, I wouldn't be starting right now. I'd be waiting till everyone's let back out of their home and then going and talking to builders at that point.
Yeah, because really, I guess, the effects of isolation, that's going to roll over to a whole lot of
and if you're halfway through a build, other builders don't want to take it on. Lenders struggle with it. You just don't want to get yourself in that position. So I would be holding off. And more importantly, chances are you've got an asset that would need to be demolished before you build the new one. Right now, that asset can still earn you money. So have that asset working for you today. Don't knock it down. Get the rent on whatever it is today until you can see that there's light at the end of the tunnel.
Yeah, okay. No worries. So Joey, another question. Joey, tuning in late, but would love some insight into how deep this is going to go. Depression, recession. We probably talked a little bit about this earlier in the piece. So maybe Joey might have to watch the rerun. But he does have another question. How do we narrow down a strategy at a time like this? Early in the journey, 1 IP, 1 PPR, age 29.
Well, I think firstly you need to understand, remembering that you're in a forum for property developers. So if you're talking about investment properties, it's probably the wrong forum. But having said that, because one is a very passive strategy and one is a very active strategy. Being a passive strategy, you buy and you wait for the market to do the heavy lifting. And right now the market's going against you. Whereas being a developer means that you actually learn the skills to force the value onto the property yourself. So there's a number of different development strategies you can learn, and they're all, I guess there's all pros and cons to each one. Unfortunately, you just missed a 2-day event that we ran where we actually help you to pick that strategy, but small scale subdivisions, small scale duplexes, small scale townhouses, if you've not done anything before, one of those three are skills that you can do in the short term that can then scale later on as your skills grow to then, turn from 2 to 4 to 6, and then you can grow up as you get your skills better and as you nest egg better.
Yeah, absolutely. Corey says, thank you for replying. I'm conscious, we've got about 20 minutes to go, so I want to sort of put it back into you, Nigel and Rob. Nigel, I'll start with you. If there's anything in particular, I said, in terms of strategies or tips that we haven't already covered for anyone that's looking, particularly for the commercial loan side of things, conscious that there may be people who are settling properties and then looking to construct. What is the best sort of strategy for them or at this moment? Because you're talking about development finance being a lot tighter. And so what is it that investors, private lenders are still looking to fund?
So no, there was a time where if you are building a commercial, if you had a commercial build or a project build in a metro, there were not a lot of conditions like pre-sales or anything of that sort. But now in the current scenario, if you don't have pre-sales, you're probably not going to get a foot in the door. It's tight, it's tough. Your pre-sales most likely would now need to cover 100% of your debt exposure if you're doing a project build for a lender to even consider it. And then the next part is your location. So yeah, if you're outside a metro, you need to do your research to ask yourself why you're out there and what's your ROI going to be. Because now besides pre-sales, they are now also looking at your ROI, because at the end of the day, the private investor goes out to get their funding. So they need to have a business plan where to convince their investors as to why they would need to invest in this project. So yeah, So these are two things that in terms of project development finance that the private lender will look at. So the first thing before you go for any project finance, you need to have your feasibility plan. Develop and create a feasibility plan, and based on that, and then submit that to your private lender, and then based on that, because how project development would work, finance for project development, the lenders will lend 65% of the NRV. NRV is the net realization value, which is the GRV less tax. So they will lend that based on your feasibility plan. So yeah, it's understand the process, learn the process before you jump into any project development. Make sure the first thing I would always recommend is create a feasibility plan and see how feasible that project is going to be worth, and then that way you know how, if you need finance, how easy or difficult that could be. And then obviously based on location, what's your pre-sales? There could be some areas where lenders initially would just do this deal with a 10% pre-sale, but now that 10% is increased to 50. So yeah.
Has that just been in the last few weeks? Because, you know, we went for having to have pre-sales to cover debt, to, you know, in the last 6 to 12 months, lenders not requiring the need for pre-sales because it was very much an owner-occupier market. Yes. Is that because of the virus that private lenders 100%. Have gotten back to needing some?
100%. Yes. In terms of normal residential lending, the rates have gone down. In terms of project finance, they have increased and they have tightened. I just had a deal last week that was all fine, and the lender just changed. It just did a 180 degree. So that's the market for private lenders right now. They've become very skeptical and super conservative.
Mm. Yeah. Rob, have you experienced this at the moment? Have you had much to deal with that space?
I'm not in a cycle where I'm requiring any pre-sales at this moment, so I guess none personally. What I can say, I was in the process of refinancing irrespective, and what I've found is that the whole process has slowed down. I guess the timeline. Firstly, they're being overworked because everyone's coming to them, and secondly, there's just not as many people in the office, so the timelines are taking a lot longer. And I would very much anticipate that their risk appetite has also dropped significantly as well. So whilst I haven't had that experience, I can certainly see how that would occur.
Okay, so the message here, it seems to be one of take caution, take time, be patient. What else would be the takeaway message here, Rob? And then I'll head to Nigel so you can have some thinking time.
Would you humour me in doing a slide or two with a couple I've prepared earlier?
Itching to slide away. Go ahead, Rob.
So firstly, don't be this guy. Be prepared, guys. The market, we know what's coming. So now is the time to prepare yourself. We touched on it before. How do we go and have a look at our budgets? How do we look at our assets and liabilities and that sort of thing? Where can we reduce costs and know that that's coming? What I would say is be alert but not alarmed. If we have a look at all of the crashes that have happened over time, and there's been a lot of them, you'll see that every single time there's been a crash, there's equally a recovery on the tail end, and it does come back. So if you are in a position where you can afford to hold, then hold, because it will come back to you. If you can't afford to hold, then now is the time to be making those decisions, not in 3 months' time when the rest of the world is panicking. Make those decisions now. What I would say, though, is that if we have a look at this slide, this is the ASX 200 index against the CoreLogic Home Value Index. And what you can see in the blue line is the share market, and where the share market has a peak and then a lag, the property market also has a peak and a trough. but there's a lag behind it. And more importantly, the impact is less. Okay, so the share market will drop a lot further than the property market. And that's because people will tend to hold on to their assets for longer. They won't want to realize a massive loss. Whereas in shares, they're talking about tens of thousands, whereas in property, they're talking hundreds of thousands. So people will tend to hold on to it for a little bit longer and ride that curve. So know that the impact is not going to be as big as you see in the share market, but the share market is a massive indicator of what's going on. But for every market where there's negativity, there's also positivity, okay? So there's always going to be opportunities. So as an example, here's a share market, Zoom teleconferencing. If you have a look at where they were in January and where you look at they are today, they've gone massively up. So it's about looking at the opportunities for what they are as they present themselves and not panicking about everything going south, but then looking at, well, what is going north? Because there's going to be an increase in, we've already seen an increase in toilet supplies, an increase in pasta and rice, shares in Coles and Woolies almost guaranteed to be going up. So there's, for everything that where there's going down, there's going to be a market going up at the same time. So look for that, okay? What I would be doing is do what this guy does, Warren Buffett, be fearful when others are greedy and greedy when others are fearful. So people are starting to panic right now, and that you're going to see the market start to drop off. That's where the opportunities are going to present themselves, at the bottom, knowing that it's at the bottom and it's going to come back. So I would not be fearful right now. I'd be alert but not alarmed and looking for, how do I prepare myself for that? How do I get deal ready? How do I cash in anything that I can afford to that is not going to be deemed a fire sale? How do I get my finance pre-approved? How do I reduce my current income and expenditures? And how do I go out to whoever's out there that owes me some personal money and seeing whether or not they're in a position to give that back right now? Because if they're owing you money right now, if you go to their house, I guarantee they're home. Okay, so now's the time to go out and call in that favor. That's kind of my, be prepared, folks. Be prepared, and if you're prepared, you can make educated decisions.
And the thing is, I'm very much an optimist that, I do believe, like I said, being able to see what's happened in the past, that it will pass.
It will pass. It absolutely will pass. And there's going to be tough times now for sure. But know that it will pass. And it's how do we get through this little phase?
Yeah. Nigel, any sort of messages to the community before we sort of start to wrap things up?
Yeah, definitely. The first thing, budget. Second thing is, if you have a mortgage, go and review your rates, talk to your bank, talk to, if the bank's not supporting you, go and do your research and look around. And the number 3 is, if you are looking at purchasing, work out your approvals when everything is bright, and because things will change and banks will tighten up. So definitely these things, that will help you save as well.
Absolutely. Thank you. If anyone is looking, so we've got some pretty, I think the good thing is that we've explored pretty much sort of the threat and opportunities there. We do know that it's going to be a bumpy ride. If you have the capacity to bunker down, do so, but get yourself ready, get yourself educated, get yourself prepared, because the market will pick up. And we've got someone here that's in the education space. Look into joining virtual networking sessions. Start learning from that if you're not already educating yourself. I mean, we're all sort of stuck in isolation. We might as well do something beneficial out of this. Rob, you're going to say something?
Oh, is that the right time for me to give a plug to my virtual?
Yeah, of course.
So we've been running monthly networking groups all around the country for the last 8 years or so. And obviously in the current times, we've turned that into virtual events. we're using those opportunities to keep people up to date with what's happening in the market everywhere as we go. Typically, we ran a meeting in Brisbane, Sydney, and Melbourne each month, and it was always dedicated to that particular jurisdiction. We're still keeping that theme, but what we're doing is we're opening that up to our members to say, well, just because you're in Sydney doesn't mean you can't turn up to the Brisbane market and the Sydney market and see those meetups and get to know those sorts of things. So if anyone's interested in those, I can give Cheryl the link to jump on and join our community and get up to the date info. And because we're running those pretty much every week, we're keeping very much on top of what's going on.
Yeah, highly recommend being out there, particularly if there's a whole lot of doubt, concern or fear that you're feeling. It's good to be able to be surrounded by others who may or may not be feeling the same, but at least probably give you a bit of comfort around where you're at the moment.
Yeah.
Definitely, the strong message that I want to give is definitely one of community. So really, as much as we are sort of apart, we are so fortunate to be in that situation where we can virtually still hang out with people, and share knowledge, and provide support. So anyone that's going through a bit of a tough time at the moment, reach out let's see how we can help out. If you have a bit of spare time, definitely look at filling that up with some education, and also, looking at your personal finances to see whether you should be benefiting from some refinancing as well or otherwise. Speak to Nigel about that, which I'll also include a website link to him also.
Just a small thing as well, Cheryl, about what I'll just so that the viewers know also what we are doing as a business as well. Just guys, just in case you don't know what I do, I am the founder of My Loan Pays Me. We've been live for 6 months testing out our system, and you will see us on social media very soon. The reason we are called My Loan Pays Me is we want to do something for the community by actually truly giving back. Just as the name suggests, we will be the only fintech. So My Loan Pays Me is a fintech. We are a mortgage broking company, but we're a fintech. So everything's online, and you can go online and do everything online. You will have face-to-face or video conferencing with brokers like myself or my team. So what it does is, the reason for the name is we will be the only broker fintech in Australia that will be giving our customers a cashback every month for the life of your loan. So how that works is, as mortgage brokers, we have tied up with most of the lenders. We've got 30 lenders, right from Westpac, St. George, and the rest. We will, as mortgage brokers, the mortgage broker receives an upfront and a trail. We're going to be sharing that back to our clients for the life of their loan. On top of that, whoever is successful with us, we will donate part of our proceeds to charities that we have signed up on our platform, like the Australian Cancer Research Foundation, Beyond Blue, Diabetes Australia, Australian Flying Doctors, and we are in talks with Breast Cancer and Children's Westmead or Starlight Foundation. So My Loan Pays Me truly believes in giving back. So besides getting a good rate, you will actually be paid every month for the life of your loan. So this is something that we want to make a difference. And this will be the Uber of mortgage broking and disruptor. So moms and dad, they love what we do. Banks love what we do. Possibly the mortgage brokers may want to burn my business down, but that's okay.
That's okay. You can't be loved by everyone. I'm sure borrowers at the moment, if they can get a refinance and then money back in their pockets.
Absolutely. We are doing refinances as high as 4,500 per property, or 3,500 if you've got multiple properties for each of your property that you refinance. Yes. So I'll send you my link, Cheryl, and then you can share it with the group, and whoever's interested, I'm happy to have a chat,
Thank you. I think that brought both of you and your input. I want to say thank you very much on behalf of the whole community. I think that was a lot of value that both of you brought. Hopefully, like I said, a bit of a very thoughtful and considered approach to what it is we're doing in the property space, particularly development. It's risky enough without having a global virus attacking it. So definitely want to be able to get yourself prepared and cautious how you're going forward. Rob?
I do have one parting thought that I forgot to mention earlier, Cheryl, and that is for those of you in the community out there who don't have money to get into deals, you're coming up to a fantastic opportunity to actually be negotiating no money down deals, where people will start to give you terms in order to maintain their price points. So those terms may allow you the ability to add value through the development cycle and have time to do that. And by the time you have expired that, then the market may have rebounded. So if you're wanting to learn how to do those no money down type deals and that sort of thing, more than happy to have a chat as to how you can use that to your advantage. I guess there's a number of different ways. We teach about 6 different ways to do no money down. So
great stuff. All righty. Thanks, Rob. Thanks, Nigel, very much. We've got a few thank yous from the community as well. I'm sure there might be a few more questions that will come up. So take care, everyone. Stay safe. Stay indoors. No touching.
virtual high five.
And virtual high fives, fist pumps, and namastes to everyone. Be good and stay healthy. Bye.
Thank you, Cheryl. Bye, everybody.
Bye-bye.
Yeah.